Morning, this is Babatunde with Penny Stocking 100 to 1000, and we're back with the series. We're finally starting to kick off the series where we will be officially starting up an account, a fresh account with $100 and showing you the progress it takes to grow that $100 gradually to 1000. And so today we made our first day trade with the $100, starting out with the $100. We just deposited it. As you can see, it looks a little crazy right here because you get an instant buying power of $100 once you deposit, but it doesn't really, the funds have not settled yet, so that's fine. But it shows we have a net account value of $14.85. And let me explain where that comes from, and the buying power of $100 and $104. And let me show you where this comes from. $4 out of this comes from when I signed up with Webull. They gave you a free stock, and that was valued at $4, and I sold that one. So that's where the $4 comes from. And where you see the 14, that's the money that I have, that's settled funds. That's the $4 I got from the stock that Webull gave me that I sold, plus the $10 that I just made today on my first day trade for this account. And so you can see we have 2 day trades left, so we did make the trade. And let's just get into the trade that we did this morning. And it was an interesting day in the stock market because it was a down day. Obviously, I think the reason why was because Google is not having a very great morning because they had an earnings release, and the sales were down as most people expected. So I think that had something to do with dragging down the market. But as you can see, we gained $10.27 today on, let's ignore the other trades. Those are trades I made before. But the first one is HEB. That's the one I made today. Ticker symbol HEB. We made $10.27 on that. And let me just break down where we got in. We saw this in the pre-market at around 9:20-ish. We kind of hesitated a little bit. It had quite a bit of volume, and it was the highest percent gainer for the pre-market. So I decided to think about getting in. Now this thing came up to around 28.5 cents, and I thought about getting in then, but then I kind of hesitated a little bit because you never know. And like I said, I'm not the best trader. Sometimes I get in a little too late, but I decided to get in at 9:28 when it spiked up to 30 cents. I said, let me go ahead and get on the train. And so because I got in so late, I said, I definitely need to sell pretty soon. The 52-week high, the 1-year high for this stock was actually at 35 cents a share. So I kept that in mind as a resistance level. And I put my sell order in. I only wanted the 10%. That was pretty good for me. I took the 10% gain as my win. I got in at 9:28 at 30 cents a share. I bought 344 shares. And I sold my position at 9:31, just a little over a minute after the market opened. So a nice 10% gain, which was 3 cents a share. And it was just a 3-minute trade. A lot of my trades are like this. To be honest, I just take advantage of the strength on the open a lot of time. That's really a very simple strategy I do, but you have to be quick. You have to really be on it, in order to make this work. You can't hesitate too hard, even though I still do it at this point. But I got in and I made my money and I got out for 10% gains. Now let's look at this chart so you can see what happened after I sold. Just gonna go back out of here, go to markets, and search for HEB. Already had it in my history, but okay, HEB. And you can see where it closed at 20 cents a share. So, this thing, it was, the top was actually at 33.66. So about 33.5 cents. So I really got out at the top. And you have to have the discipline to do this, to be able to lock in those gains and not even worry about the resistance. Sometimes it's not going to be so cut and dry. You're going to think, oh, well, it had a previous 52-week range at 35 cents. Maybe it'll reach that again. And while I did have that thought in the back of my mind, I didn't fall in love with that idea. I took the gains as they came just in case. I took my gains and I left. And so this thing actually opened at 27 cents a share. And so, I was looking at maybe down 6 or 7% on my position because I got in at 30 cents. So I was down like 6 or 7%, which was fine because, like I said, I'm just playing for a quick move, and I saw that it had potential, so I just wanted to get in. I just wanted to hope for one big jump. And a lot of times these pumping dumps do have that one big jump on the open, and that's what I was waiting for and to sell into. And that's when it spiked to 36 cents. 33 cents. And so, yeah, that's what I was hoping for. Worst case scenario is it, opened at 27 cents and it kind of just went down and down. Maybe it got down to 25 and settled there for a while. I would have still been in, which is really bad because I would have been down over, 20 something percent in losses, which is bad. But I would still hold it, expecting a small rebound back. And what I would have did was I would have got back out maybe as it retouched at 27 again, potentially. And I would just cut my losses at 27, which means I would have just lost roughly 7% today instead. That's worst case scenario. Best case scenario is I made the 10% gain that I made. And so, it's the risk to reward was not great on that. But again, I'm not a great trader. I'm not the smartest trader, but I do know these setups when I see them because they happen just about every day in the stock market, time and time again. And so you have to have this discipline to get out at 33 or to get out at any point before this thing tops out. And you don't know when it's going to, but you just have to take your profits early sometimes. When this thing opened up 70% higher than it did the day before, sometimes it's kind of overextended. You have to take your profits as they come. So after that, it kind of dropped and fizzled out the rest of the day and it hit 20. I like those round numbers like that, 20, 30, 40. Those kind of numbers, they are really good for supports, support area, $1, $2, $1.50, things like that. Those round numbers, they're really good for support a lot of time. And so it really bounced up from that 20 cents as it reached that 20 cents mark. And you had a chance to dip buy this thing if you were really skeptical. And that's another strategy in and of itself that you can use to dip buy these pump and dumps. If you're too hesitant to get in, you don't really want to get in at those ranges, those numbers at 33. You could wait for this thing to drop and then try to get a good dip buy in. And like I said, those 20 cent marks are a good area those round numbers are a good area to kind of dip buy in a lot of the time, low risk entry. So it went to 20 and then it bounced up to 25. So you had a chance to, make around 20%, 25% in gains potentially on the dip buy. So, there was opportunity, but I'm so upset because there's so many traders who bag hold these types of plays like this. And I'm not just talking about the ones who maybe got in on the open and was hoping for a break above the 33, hoping up for a break above the 1 year high of 35. I'm not talking about those people specifically. Yeah, that's bad in and of itself. But I'm talking about the worst category when there are people who, as you can see, there was a previous close at 17 cents the day before. So a lot of people, I got on StockTwits just to kind of see what people were thinking and, get their sentiment and kind of talk and chat with them a bit. And a lot of them were actually holding, positions from 17, and they refused to lock in roughly 100% in gains, double their money overnight. They refused to do that. They said, I guess they had the mindset, the backorder mentality of, oh, well, maybe it will break out past that 1 year high. And so they're holding and holding and holding. And now look at it. It's closed at 20 cents. This thing was up over 70%. And now it's down to being only up, 20%. So it's one of those things that you just kind of have to take the gains as they come. Take the small wins as they come. And especially if you have big wins like that, 100% overnight, you take it and you don't throw a fit. You take it every time. And it just makes me so upset because I want to see everybody succeed. I want to see everybody doing well in this industry. Um, you know, and so people who are holding this thing from around 17 or 15. Now look, it's back to 20 cents. It's back to around where they just about bought. They're almost break even. And I'm sure some of them are still holding at this point. They still haven't locked in their gains. And I don't know what this thing is going to do, what this stock is going to do, later on, tomorrow, next week. And I don't really care because I don't play stocks for that reason. I don't value invest long term. As you can see, my trades are just normally a lot of time 2 or 3 minutes. So I don't really care what happens then. But, it really breaks my heart to see people just failing this hard when these plays happen so much, and it's so easy to take advantage of them once you learn the strategy. And I teach all of this and more in my ebook, The Only Penny Stocking Strategy You Need, from $100 to $1,000. And I teach all of this in that ebook. And so if you would like to learn more, the link will be in the description below. And this is our first day trade. This was our first day trade for this series, and I really hope to see more success with this so I can show you the process is possible with hard work, dedication, and most importantly, discipline. And you have to study. That's a big one as well. You have to study. So I just want to go out on that note and let you know that this is our first successful trade. The account is now up 10%. Let's try to keep going. The goal is to get the account up 1,000%, obviously. So let's keep going. And until next time, trade well, stay disciplined, stay motivated, study hard, and penny stocks will reward you. Thank you.